just over 200 million was liquidated in the last 24 hours. 46,000 traders were liquidated. That's just a reminder to be careful. This is actually pretty low, or normal. It can be over 1 million. So last time we looked at the 2-year moving average, which has proven to be pretty handy. Essentially, if the Bitcoin price is below the 2-year moving average, that's a good time to be buying. And if it's above 5 times the 2-year moving average, that might be a time to start thinking about trimming. That's typically the zone where we peak. So we'll look at a couple of methods which have tended to do better at identifying the top. But today I wanted to look at the stock to flow model. That was actually the first model that I came across that was more Bitcoin specific, which wasn't just traditional technical analysis. So not just looking at the RSI or Bollinger Bands, moving averages, or things like that. The stock to flow model is based on looking at other assets. So stock to flow is literally that. It's the ratio of the flow, which is the amount of new whatever has been created. So if you're talking about gold, we look at how much gold has been mined, while stock is how much gold there is. If you plot the price of things against the stock to flow ratio, you kind of see the higher the stock to flow is, the more valuable it is. It's basically a gauge of how scarce something is. So if we're talking about gold, it's rare. It's hard to mine, expensive, lots of pollution. So every year you might get a couple of % more. You might find a big mine like they did in Siberia, I think it was last year, and that affects the price of gold because suddenly the flow increases. Suddenly there's more gold out there than people had expected. If there's more of it, its value goes down. If you look at silver, its stock to flow is lower, as is its price. The interesting thing with Bitcoin is that there's a fundamental cap. At most, there's going to be 21 million Bitcoin. Actually, people estimate it might be maybe 17 or 18 because so much has been lost. If you got some Bitcoin and you put it on your wallet and you lost it, there's no way to get it back. If you forgot the password, there's no way to get it back. A lot of people did this. Back when Bitcoin wasn't worth much. Back when it was more a fun thing. It was something like 100 or 1,000 Bitcoin was worth $1 when it began, while now it's approaching $100,000 for one Bitcoin. Getting back to stock to flow, the rarer something is, the higher its value. And with Bitcoin, the stock is hard-coded limited. With gold, you might find a new mine, and so more of it becomes available. Of course, people have been looking for gold forever, so it's hard to find. Whatever's out there has already been found, in effect, because it's always been valuable. Another thing is that when the price of gold shoots up, it encourages people to look for more. And so the amount of gold, the flow increases. Suddenly more gold is found. Like with oil. If oil is only $10 a barrel, only the oil which is easy to find is used. On the other hand, if oil goes up to 100 or more, suddenly other projects become feasible. But that's not the case with Bitcoin, because it's machine coded. So we're not going to have a sudden increase in the supply of Bitcoin. We're not suddenly going to find a big gold mine in Siberia. So all of these things basically mean that the stock to flow for Bitcoin is the best. It's the scarcest thing out there, and hence the most valuable. And you can project 20, 30, 40, 50 years in the future. No more Bitcoin is going to be found. You're not going to be able to go to an asteroid in space and find gold. Like the Spaniards went to South America and bringing back a huge amount of gold. So in short, this is the typical representation of stock to flow. If you use stock to flow for Bitcoin, we can see what the expected price is. And you're going to have variability around it. The colouring is related to days till halving. So what happens in Bitcoin is that roughly every 4 years, we have a halving event. And that reduces the amount of Bitcoin in half. Or it reduces the flow of Bitcoin in half, kicking the price higher. So what we have here is the difference between the price and the model price. So a good time to buy is when this is low, when the market is underpricing what the stock to flow model says it should be, given the fundamentals. At the moment, we're low, we're below the line. So stock to flow would suggest now is a cheap time to buy some more. When the price is above the line, we're probably near the peak and should be thinking about maybe selling. So we can see here, this was above the line. We'd overshot the price. We could have sold. So here, the Bitcoin price, as you can see in the box, was 181. Note that the scale for the price on the left is logarithmic. So the price isn't just increasing by 10%, it's increasing by a factor of 10, 100, 1,000, and so on. So here, when the red line is well above the line, might have been a good time to sell when it was $46. Of course, you'd be going, $46 is a good time to sell. It's closer to 46,000 now. But if you'd sold then, waited till the price came back to the line. So here, the price was 100. Oh, so it didn't go down. Sorry. So here we're at the red line. So the price is over. And the Bitcoin price is 138. And if you waited till it came back to the black line there, the price is now 94. So the price fell something like 40%. We could have bought more at that stage and waited till it shot back up again. So here looks like a good time to sell. Now it's over 1,000. That seems to have been the peak. Likewise here, this was red over the stock to flow model price. This was red. Now 19,000. Of course, it's not that easy because, okay, this model is saying this would be a good time to sell, but if this was today, we wouldn't know whether the price was going to go up more and more. It doesn't tell us that, okay, it's red, it's above the base price, the model price, but it doesn't tell you that now is a good time to sell, because maybe it's going to go up another 30, 40, 50, 60%. As I said, there are other methods which have tended to be better at identifying when we might be at the peak price. So kind of like with the 2-year moving average, we get a big picture. We get the idea that this is probably a better time to sell. So we've got the model variance. So the model variance is over 1 near the peak. Here it's red, but the model variance actually went up to 1.6. So maybe I want to wait till it's over 1. Maybe I want to start selling. So every other day, if it's red, I'll sell 10% of my holding, knowing that I won't accurately be able to get exactly the peak if I was using only stock to flow. Likewise, I don't know whether this is the bottom price, but the chances are this is a good time to buy because we're below the line. So that's basically the stock to flow model. You have multiple asset classes and they have a stock to flow ratio. And you can apply it maybe to housing, you can apply it to gold and silver and various things. On top of that, we use market mechanics or human psychology. So we know that after we have the halving and suddenly we have half the flow that we had before, the price suddenly will start going up. Because suddenly, if you want to get some Bitcoin, it's not available. So you fight by paying more for it. Once the price starts going up, greed comes in. I want to buy it. I'm expecting that we're going to go up a lot. So suddenly there's a surge as people are rushing to jump on board this bull run. As more and more people buy this, as the newspaper starts saying, oh, Bitcoin has doubled again, more and more people are trying to buy even more. We have a positive feedback loop. So the price keeps going up, attracting more and more buyers, until we have mania, where people just start borrowing money, plowing in as much as they can into Bitcoin, all dreaming of making fortunes, before realizing that they've gone crazy, that they've paid a crazy amount for Bitcoin. So yes, I know, or yes, I expect that Bitcoin is going to go up higher and higher and higher, but this is well above what the fair price should be. And at that stage, people suddenly rush for the exit. The smart money has sold. Now suddenly when people are looking to sell, there's no one to buy. So the price just collapses. Loads of people try and sell. Now as panic is spreading, again, there are far more people trying to sell than people trying to buy, because why would you want to buy something which is crashing? And so the price falls from well above the fair price to well below the fair price, at which stage we again have another halving. Suddenly the flow is reduced. Suddenly there's not enough Bitcoin, and we begin again. That's the basic mechanic, and that's roughly a 4-year cycle. In that framework, we're halfway through the bull phase. This is an attractive time to buy, and then we're going to be thinking about, how do we exit? Do I want to sell once this goes red? Do I want to try and predict exactly the top? What are my options? So we've looked at two methods, the 2-year moving average and the stock to flow. They both give me methods or signals as to where we might be approaching a top and when we might be underpriced, when it might be a good time to be buying. But both don't really zoom in and tell us whether we're at the peak. So next, we're going to look at the pi cycle, which has been very accurate at predicting when we've reached the top. See you then.